to form part of our network, which means I can have foot soldiers on the ground without investing to brick and mortar. Equally, where we are and they are not, we provide the same arrangement for them. We can serve their customers. And this then brings a kind of partnership between the two institutions. Two is a co-location arrangement where we are saying, where we identify a strategic location of value to them and value to us, we'll co-invest. We've done that in Machakos. We've done that in Kakamega. We'll be doing that in Mombasa as well. What this does to us is the cost that we would have incurred in putting up a branch is probably split by 50%. All right. And then gives us that reach which we are looking for without necessarily making wholesale investment. Number three is when you look at technology now, one of the solutions that we have is our mobile banking platform. We call it Spire Go Mobile. It's an award-winning solution for our customers. And with your mobile banking, you can do anything that you do in a normal branch. So we are saying we want to enhance this electronic platform so that we give our customers one, convenience, so that they don't have to come to the bank when they really do not have. So our branches going forward will actually become less of transaction and more of advisory centers for our customers. So if you are thinking of a project, you're thinking of where you want to take your business going forward, you come to branch to do that kind of a thing. But banking of cash, transaction, ordering bankers check, your checkbook, your debit card, your credit card can be done online without necessarily coming to them. Of
course, and also easing pressure in the banking halls.
Absolutely.
All right.
Absolutely.
Team, of course, the bank has had a rough run in the last few years, having bad debts as well. Just update us on the process so far. How far have you reached?
Okay. That is true, and I think I must commend the board and the management of then ECB because they made conscious decision to make provisions even without being asked by the regulator to provide for that and the other. And the reason for this is they saw a need to clean the book, start on a clean slate. So what we have done so far now is to ensure, one, we tighten our back-end processes to ensure the quality of new business that is coming on board is of the right quality that we are looking for. Two is to engage in rapid recovery. And when I say rapid, I mean exactly that. So what we've done is that a lot of those customers who refuse to pay for whatever reasons, a lot of those matters are before courts. And as you know, you are injuncted from doing anything until a matter is determined, or the matter is determined by the respective court. But that said, we've adopted alternative dispute resolution. And we are telling our customers, no court will ever tell you not to pay your debt. Can we talk about how we can resolve this debt so that we agree on a middle ground, see our position, we see our position, pay off, we have a relationship, we move forward. That's going to ease pressure of recovery. But the matters which are in court, we have to wait until if alternative dispute resolution doesn't yield, until the cases are determined. All right. But we have made sufficient, substantial progress year to date in terms of how much have you recovered? Out of the existing data, I'll tell you, we have done about 30% in the last 6 months.
Of how much?
Remember when we published our financials in as at March 31st, we were at 3.5 billion. We have brought that down to about 2.9 billion. So
not significant, but a step in the right direction.
A step in the right direction.
Okay.
And there are more names which I'm going to yield in the next 2 to 3 months through the alternative dispute resolution model. Okay. Yeah.
So really, lastly, of course, CBK has been taking a tough stance on banks, and 2 banks have been placed under receivership. What's your assurance to the market that the banking sector is still resilient?
This has been a major issue of concern, not just to customers, but also to banks as well.
Okay.
And because there's no joy when one bank goes down, it doesn't mean we become stronger or the other banks become stronger.
Okay.
It brings a systemic risk to the entire industry. But I can tell you this, I think the governor of Central Bank has been very as April is saying that the sector is safe. What you've seen in the two banks, the reasons why they went down, they are common reasons.
Yeah, common factors. Yeah.
Common factors,
yeah.
But the regulator has gone ahead to ensure that those issues behind the back, what you as a customer can't see, are being resolved. As you're aware today, apart from the normal audit, Central Bank ordered an audit of the ICT system and of course inside lending. Now what is this going to do is going to level the ground so that from a governance point of view, the ground is leveled. You as a customer, you not be worried whether this bank is big or small, in so long as you are assured of the governance structures.
Okay.
And this is the right move. Probably should have happened a long time ago. And this will ensure that now banks will be on a takeoff, because the issues of where directors connive to do one or two things, they'll be a matter of the past.
Many thanks there, Tim Gitonga, Managing Director, Spire Bank, which has just rebranded from ECB, also known as Equatorial Commercial Bank, speaking to us this afternoon. Many thanks, sir.
Thank you so much. It was a pleasure.
I appreciate it, and
Thank
looking
you.
forward to seeing what that will yield.